Think about what you did.
Nobody makes it to the end of these things. Come on.
The Broken Agenda Podcast. Sponsored by Laughing Rock Technology.
Well, this is the first time Jimmy's ever done research, and I was startled by how organized it was. I opened it up. I expected it to be a bunch of drawings in crayon of like Sonic the Hedgehog.
He's like my child that you know it's in him. It's in him. But you just got to draw it out.
You can do this, Jimmy.
Yes,
you can do it.
You know it's there.
No, that's what always just throws me with Jimmy is he will screw around for weeks on end and screw with me nonstop, and then he'll drop some insightful bomb that makes my head bleed. And I'm like, I don't even know what to say to that. That was like remarkably well thought out, and I got to do some research to even respond. I'm like, where's this guy coming from?
Who are you?
And then he makes a fart joke. He goes right back to Jimmy. Like,
That's great. That's very true.
That's my position.
that is you're the wild card, man. There's a reason that's our straight man. You're the wild card. You got to mix it up. I like it. What were we talking about before we left for break? I don't even remember.
Something about banking.
Straight man. That's what I'm talking about.
That's insightful.
Yes.
He's really paying attention.
He's just been playing Minesweep. It's not computer's not even hooked up to anything.
Hey, I'll give you one that I looked up real quick. I'll
Yeah.
give you a gem that I didn't even know. Any guess on what the I-bond rate is right now?
I-bond is at about 10%, isn't it?
Almost.
Yeah,
I
9.9
had
or something
no
like that.
idea. I
Yeah.
had no idea.
I track those. The problem is when you're at a 15% inflation rate, I
Yes.
hate a 10% return.
I
And
know.
I had this conversation. It's a $10,000 max on I-bond, right?
Yeah,
Yeah.
I believe so.
Per year. You can buy multiple,
year.
but it's per year. Yeah, for anybody who doesn't know, an I-bond is basically a federal bond that you can buy that usually pays a significantly higher interest rate. But until inflation tamps down, like I don't want to tie money up in a lower than inflation return. I want to
Understand.
But the problem is nothing's returning right now.
Correct.
So everything is speculative. You're hoping and praying.
Yep.
So
I was just surprised that it was to that point. I didn't realize that.
I'm actually expecting it to go up.
Yeah, it should. It should follow.
I mean, interest is actually creeping towards I-bond levels.
Yeah.
It's
Well-
happening so fast they haven't updated the I-bonds quick enough.
Correct. So you might see a big jump.
That's one of the things that I thought was interesting, like as I was prepping for this, because like when we had the conversation, like you as a bank, like you've got to do things with your money, and that's what I thought was interesting. The conversation we had when we talked about like the overnight funding rates and the fractional reserve, like how you have to loan and you have to keep the money moving and active.
Correct.
And then
that's our task.
Yeah, to look at treasuries and I-bonds and all this stuff, and as I was doing this, I was like, to talk about how the bank, what the bank is required to do with their money. I think is a good topic to go into, so that people understand how banks work. Because I don't think anybody really thinks about it.
We're a service industry, and a lot of times we get a bad rep. And there are bad. I'm not going to lie. There are bad banks.
Wells Fargo.
Whatever. Yep, I would second that.
What?
So.
Sorry.
We're never going to get airtime.
But if you think logically, there's purposely a 3% is a magic number. 3% is what banks strive for what's called net interest margin. What you loan, what you give your depositors. The 3% is what pays my salary. Okay, so that pays my salary. Like we're not working for free here. We're not a nonprofit. People always complain about fees and all that, and that can all be adjusted, and that's part of it. But the bottom line is, and the 3% is there on purpose from the government back in like the 30s or whatever it was. But, you look at the overnight funds rate, which is what we borrow overnight if we need to borrow from the Fed. So if we don't have enough deposits to cover our loans, we have to borrow that every night. We have to net zero every night. And that rate right now is 3.25, which is why prime is at 6.25. It's always 3%. So there's magic numbers in banking. So if you ever see a bank with a net interest margin, which is public information, by the way, less than that, they have a problem.
They're in trouble.
Yeah, they have a problem.
And if it's at like 5%, they're ripping.
Then they're
off.
ripping you off.
Yeah.
Yeah, then they're charging too much.
That is a tight margin, though. I mean, you're
It's
dealing with a lot
very
of money,
tight.
but 3% is.
It's tight.
Yeah.
Can you just explain, like, when people were like, what do you mean when you say the bank has to be net zero every night? What
So
exactly?
whatever, if we lend out $100 million, we need $100 million on deposit.
And why would that be off? What is it that
Could be
makes-
off because somebody comes in and takes $1 million out in cash that night or that day. You know, I mean, not saying that would happen, but it could theoretically.
Could you do that?
Cashier's check.
Cashier's
Absolutely.
check, yeah.
Absolutely. Money's moving all the time with big corporations.
There's no limit on a cashier. If you got the money,
No,
you can
no
ask cashier's
limit.
check?
It's your money.
Interesting.
Absolutely. You know, absolutely. You know, people think of banks as, you know, also like they always talk. A funny stat is people like, oh, we're going to rob the vault. You know, they got all this money. We don't have like all the money in the vault. You know? Like, it's not all there. You know, on average, you
At the end of the night, there's zero.
right.
There you go. There you go.
Yeah. On average, there's probably like $200 per person in the vault. Like,
wow.
Like if you want to go on an average, you know, again, public information.
That's why I stopped robbing banks.
Yeah.
It wasn't there anymore.
I heard it. Yeah, I heard that too. So I never started.
I know.
On the flip of that, to your point, if we have too much deposits, if we have too much, we sell it on the overnight funds rate. So we can either sell it back to the Fed or we can sell it to other
another
banks,
institution. Yeah.
other institutions, which is actually a more attractive rate for us. That rate is normally better for if you're going to sell to other banks.
But now I got to imagine though, if you borrow from the feds because your deposits don't match your out, in not out, you have to pay that back.
Yep.
With
So
interest.
It's interest.
With
It's
interest.
interest.
Yeah.
With
So,
interest.
So we're paying interest on a nightly basis if we're short.
okay. So
So that's why we see CD specials.
If you continue to have short deposits,
That's a problem.
okay, gotcha.
That's a problem.
So you have
Exactly.
to make that up. You have
Yes.
to find a way to. Okay, gotcha.
And that's when you see banks do CD specials.
okay.
That's what that's for. CD specials are an influx of money that's guaranteed for a certain amount of time. Why do you think there's a penalty on CDs?
So just to be clear, so when that prime rate was basically zero,
Yeah.
which it actually went, I think it went sub-zero at
Well,
one point. Not in the
pro-
U.S., but in England, I know it did.
Oh, okay. Maybe in England it did.
Yeah,
that's
here
a
it didn't.
huge, yeah.
But that's how mortgage rates got to 2.5, 2.75, 3,
Yes.
3.25.
Yes.
Is because you were still shooting for that 3% mark.
We're
that you're
still
talking
shooting
about.
for it.
Okay, that makes
We're
sense.
still shooting for it. Yep.
Okay, wow.
So your deposit rate could be 0.1 in your savings account, but we're lending at 3.25, you know?
So you're at 3%.
Yep.
And that's where you make your money.
Yep. And I mean it's every bank. Like it's not, but like you said, you can monitor that. Like you can look that up. It's all public.
That's interesting. That's
And it's like it's kind of a tight margin too. It's not like
no 3% super tight.
yeah.
Like
It is.
I mean, even restaurants run higher than 3%
Yeah.
on average. I mean,
Yeah.
and they're running tight margins too. So that's, I mean, now granted, you're dealing with a level of volume.
Correct.
Yeah,
that-
which
unless
is
it's
semi.
Chick-fil-A,
Well, and-
you're
and
not
and
to
it's
put it in
dealing-
semi-consistent. Like you almost,
Correct.
it's almost
Right.
like a daily consistency.
Yeah, it doesn't like,
There's, like-
swing overnight. Like
Yeah,
that
like-
doesn't change dramatically overnight.
Yeah, like say in the contracting world, maybe somebody makes 10, 15, 20% profit margin, you know, but then there's these downtime periods where the
Yeah, but
know,
you're-
they kind of are built in there.
Your
you know.
residential customers have to do their direct deposit every 2 weeks. Your commercial customers
yeah,
have to
yeah.
deposit their receipts probably at least weekly.
Yep.
So it's there's a fair amount of consistency to all of it.
And so this fractional reserve banking, right? So
Yes.
means that like I deposit $100, you can loan 1,000.
Yep.
Like how does that play into all this, and why do that? Why allow a bank to loan 10 times? Isn't that a recipe for
So
problem?
So the fractional reserve is from my understanding anyway, is more on the sense of what we need in cash reserves, not necessarily lending 10 times more, but what we need on, because they just lowered it to zero, like in 2020. I don't know if you knew that.
Lowered what?
The Fed reserve requirement change, which normally is about 10%, like which means we need cash reserves of about 10% to cover if there's like a run, you know, stuff like that. But things have been pretty good, and they needed more of an influx on the lending side of things. So because they needed more of an influx, they went from 10 to 0 in 2020
Does that mean
during
you did,
COVID.
does that mean you didn't have to have anything?
Technically, no.
Wow, that's worse than.
It's way worse, yeah. But in fairness, banks would lose customers if you come in and want to withdraw money and we're like, oh, sorry, we don't have that.
Isn't that what's happening in China right now?
Yes,
Yeah.
that is what's happening in China right now. And that's what happened back in the 20s, whatever. I mean, bank runs are real.
I mean, at the end of the day, though, what is the FDIC insurance at right now?
250.
Yeah.
250, 100% guaranteed.
That was
by
the
the
whole
government.
reason they did that.
Correct.
Though, was in the event of a bank run.
1933 or
Yeah,
whatever
it
it
was
was.
100,000 33. Right?
It used to be 100,000.
We upped it in 2008.
Yep.
Right? Yeah.
That is absolutely right. Wow. Yeah.
Yeah, I'm a nerd.
Yeah.
You're hanging out with a fellow
He's
nerd.
on
my friend.
point. Yeah, you got it. He even has the years right.
That's weird. That's just weird.
That is weird.
I didn't have to prep for this one. This is my world. I live in this crap. So,
But yeah, it's 250 per depositor, and what other people don't. The other thing is, it's not by, like, great example. You have 250. Are you married?
Yes.
Your wife has 250. Jointly, you have 250.
Okay.
So how you structure your accounts, you have an individual account, that's 250. You have a joint account, that's 250. Your wife has an individual account, that's 250. So you're automatically 750 out of the gate.
oof. So, and each of my businesses have their own 250.
That's their own 250.
Yeah, so, okay.
Correct. So there's a lot of insurance, you know, like safety.
Which I got to imagine the problem there is the U.S. government doesn't keep a reserve, which means they're printing anything in a run on the banks, which
a little
is
different.
kind of how we got to this inflationary period. So,
Yeah, well, and even forgiving student debt is an influx in money that people don't.
did they walk that back? Quite
They
a bit?
walked it
did,
back a
yeah.
lot.
Well, I mean, I don't know where they thought this would be popular.
I don't.
But a lot of people like me who drove a 1996 Saturn until he was like 35 to
Oh, I
pay
had a
off all the
Saturn.
student loan for me and my wife, were not thrilled.
I know. Yep.
I can't understand why.
It's
You mean you paid your bill?
I paid I owned nothing but crap, and I put all my money into getting rid of those student loans because we put ourselves through college. Like we didn't have resources, and you pay it back, and then hopefully things go well after that.
Correct.
So
But that's an automatic influx in money that is not expected. So that goes to inflation. It's bottom line.
well, I think we've had a lot of unexpected automatic influxes of money,
Yes.
which has been interesting.
Okay, so before we
go ahead.
before we abandon the fractional
Yep.
reserve lending, so I'm trying to figure out if this has a compounding effect. So if you take, I guess it doesn't. So if I deposit, we'll just keep it round numbers. There's $1,000 deposit. The bank can loan $10,000 on that money. Then I write a check to. I guess it's not going to compound. Somebody else. I guess I was thinking that if I give, $1,000 check to that person, then they go deposit that $1,000, and now they can do 10 times that amount of money. So now, but that would make me only have $9,000 instead of $10,000. So that
It's out of your account.
so now that $1,000 that is just
It shifted.
Yeah.
And I might have to overnight funds.
Yeah.
I might have to overnight funds
to
borrow.
cover that.
Right.
Which is what they're doing every night anyway.
Correct.
Yeah. So it doesn't matter. It's just you lose your buffer. You lose your safety buffer.
So that it's just shifting around. It doesn't compound.
Well, moving money is everything. The worst thing you can possibly do to an economy is have savings.
Yeah.
And that sounds contrary to everything we've all been taught as kids, but savings kill economies because you can't have money sit.
Yep.
It has to move.
Yep.
It demands it. So
It's accurate.
Still, money is dead money.
And the country loves debt.
It does.
The more debt, they just keep wanting more.
And we used to responsibly manage it, at least to some degree, but I don't
Not
know.
anymore.
So let's roll that into this next. So let's talk about that. How, from a financial standpoint, if we get to double digit, which we seem to agree, double digit, prime rates,
Yeah.
how does the U.S. government pay its debt? I mean, because theoretically, there's no way we have enough money to even cover the interest on our debt.
No,
if we're
'cause
at
it's gonna-
13%.
You're absolutely right. It's going to just keep going. And even on an individual level for people that have, home equity lines of credit, if you just take it back to that so people understand, what you were paying 3.25% on for interest for that month, you're now paying 6.25. You're almost double right now. That's everybody in America. And then the government is in that shoe too. I mean, that they're doing the same thing. you just go more into debt, and
So you just print money as
you
a
just
government?
print it. I mean, that's the fiat currency. I mean, they have complete monetary control over it. We're not based on gold standard. We're not based on anything. It's completely hypothetical.
So how does that cycle ever end? Or
It
does it become infinite debt?
Well, it's going to force people, right? So like, people have a line of credit out. They were paying, 3%. The interest. Did we go back to like?
No, I mean from a government standpoint. From an individual standpoint, obviously, if you can't pay your bills.
Well, let's keep it small. Let's
leads
start
to
small, and
bankruptcy.
start small, and we can go bigger. So
Okay.
when we talked the other week about me saying, okay, well, if I have a home equity line of credit, and I'm taking that money and I have it out, and I'm investing in different opportunities, and I'm paying 3% annual rate. 3% on. On 100,000
Yep.
is $3,000 over the year.
over the year. Yep.
Right, so it comes back to what's the math?
Let's say $250 a month.
Okay,
Yeah.
$250 a month. Now that's doubled.
double it.
So now it's $500 a month. So as long as you can still justify the investment making X, or you can build that into, I'm flipping a house. Now it just becomes part of the equation, So as long as, like we talked about, okay, if interest rate goes up, no big deal. But it was
As long as
it
you
was,
can make your payments.
yeah. So because I was talking about it from a stance of having this money liquid to me to be able to take it, pay it, and do different investments. And then you guys talked about somebody getting a new home loan and having to pay 6%, and then the monthly mortgage
Well,
payment.
the cost of housing is just going to come down.
Yeah.
That's what will happen.
Okay.
All housing will come down.
But can it come down?
Yes.
How could it come down if you just printed double the money?
So I used to work in
See-
contracting, and we call that the divorce effect. So you would think most people would not sell their house if they can't buy another house, and they would just sit on it until they can eventually buy something else and then get rid of their current house. The divorce effect doesn't just apply to divorces, but think of it this way. You have a divorce. One of you either keeps the house, or more likely, one of you demands the house be sold and you split the proceeds. Now you've got two people looking to buy a new house. So what happens is you've got properties going onto the market when it's a terrible time to sell, and buying when it's a terrible time to buy. And now they're competing over properties at terrible interest rates, so they're driving down the price. That's how sellers market happens. So there are people that choose to buy and sell, and there are people that are forced to buy and sell. That's what happened in 2008. You had a lot of people that were upside down, and they were forced to get rid of their house, whether it was through foreclosure or whether it was through sale because they couldn't afford their debts, whatever. That once you get into a forced situation and in a bad market, that's what drives pricing down, because now you're selling it for whatever you can get because you have to get rid of it. So you're willing to take $10,000, $15,000 less than you think it's worth because the divorce has to finalize. Yeah, you got to take the loss.
Or a credit shot.
But still,
Or
how
your
do,
credit
how, do,
shot, or yeah.
how do you double the money supply and then reduce the cost of assets?
Well, and
I
they're-
still can't get my head around.
Well, they're
it.
not really printing money right now. I mean,
But
right?
they have already done the damage.
Correct.
So
Correct. But, China buys our debt, Russia buys our people, not Russia, but people buy our debt. And that's a whole nother conversation about like how it is globally, because there are a lot of theories out there that eventually, to your point of when does it end, it might end in a world one currency.
Which is what China's trying to do right now.
Correct.
Back to the gold standard.
Yeah, like they want a one world currency. They feel like it'll. I don't personally. I think it's an awful idea, but that is kind of the direction that a lot of countries are going.
Well, I think
And
in a
how will that
one-world
resolve
currency, it won't, because ultimately what will happen is what we did to our dollar.
Yes.
Will
is
happen
what
to
will
the
happen on a
world
global scale,
currency.
but there's nowhere else to go.
Right.
Like if we destroy the dollar, something else will rise up. Maybe the euro will become a safe space, or maybe the yen, or who knows.
Correct.
But there's no alternatives except maybe cryptos.
Right.
Do we wander into cryptos on this conversation? Or?
I mean, cryptos is an interesting conversation, but we talked about it at length. I don't think it's like what people traditionally think is going to win out, like a Bitcoin or any of that. I mean, I just don't. It's too unstable, which
Okay.
I think is right now. Like people are seeing that, So, you got to think payment processing and what is out in the network today. and you literally have to revamp wherever you go to buy anything. So Visa, MasterCard owns that. They own that space. So if they're not willing to go in, hey, we're going to accept Bitcoin, no one's going to. We're going to accept Bitcoin. But they will go to what's called stablecoin, I think is the term, which already exists for the U.S. dollar, 1-to-1. It just gives them a way to track things, honestly. That's all that does.
The problem is that defeats the whole point of a DeFi network.
100% it does, but a lot of people don't understand that, and they think that, oh, well, we're going to a digital currency. This is fantastic, and blah, blah, blah.
Horrible.
It's horrible.
Because now they can track everything.
Everything you do, you can build into that stable.
Look, before
Yeah,
my
they're gonna-
voting
they're
accident,
gonna-
I used to own a lot of firearms. I don't want to
Yes.
be tracked if I decide to buy more firearms.
Correct. And they can if the country would ever choose to go to stablecoin.
Well,
They
didn't
can
Visa
track.
already say?
Yeah,
They
credit
will.
card companies
Yeah.
already are.
Yeah,
Yeah.
at least
tagging-
Visa.
they're-
Is MasterCard
I think
too?
Discover was one of them that was
Yeah.
doing it.
Was it?
They're going to start. They're thinking
Flagging.
about flagging
As a
purchases,
separate category.
Flagging what?
firearm purchases.
Yeah.
And ammo.
Like if I
So
go to a
there's
gun shop,
codes. There's codes. So I can tell you.
So
exactly
you can't
what
use
they're
a credit
doing.
card to purchase firearms.
You can.
You can.
But it'll show up as a individual separate code. He's about to
It's a
talk
separate code. Yeah, you got it. You know it. Yeah, it's just I forget what it was, like a recreational. I don't remember the exact code.
I think it was just like retail.
It was very generic.
Yeah, it was very generic.
And now they want to say, okay, if you're a gun store, it's literally going to come through as a gun store purchase.
Or if you buy at Walmart,
Yes.
that part of your purchase will come through as a.
They'll have a separate
firearms.
terminal. They will have a separate terminal.
Oh, they're
just
actually gonna
for
terminal
that.
it.
They'll have to. That's the only way to code it differently.
Interesting.
Yeah.
Yeah, I think it was just standard retail sales because they were just selling them anywhere. They could buy it at Walmart, so it was just the same as milk.
There's merchant codes. Again, public information.
So do you guys know
it's
that
out there.
the McDonald's in Switzerland is now accepting Bitcoin?
There you go.
Well, we have an office in El Salvador, and their national currency is the U.S. dollar and Bitcoin.
Correct.
I actually, theoretically, unless the government's watching this,
Now-
pay our staff down there in Bitcoin.
So if everybody starts to accept cryptocurrency as like,
If
it's
there's
gonna
enough
eventually
startups,
stabilize.
if there's enough
it'll-
startups that were, it's all about payment processing and acceptance. Like, how do I choose to deal with you? How do I choose to deal with my local business? I mean, that's the bottom line. And for years, it's been banks going out to commercial small business places, giving them a terminal that accepts Visa, MasterCard, Discover. But then Square popped up, all these startups pop up, and that changes things. So
Well, I really think that's how Elon Musk made his money.
Yeah.
I mean, he bugged the system with PayPal.
Yep. Yeah.
And said,
PayPal.
You can pay online. So you
Good
don't have
one.
to go with a credit card. You don't have to
Yep.
punch your credit card numbers in. We'll give you another method.
Yep.
Um,
PayPal's a good
and
one.
let's
I
not
could
forget, like Visa,
Venmo's another.
Venmo's another one,
Visa and MasterCard are a middleman taking money out of the transaction, and I think that's what people.
Well, banks
need.
make money on every transaction too. Like, let's not forget about that. I mean,
Right.
we make a % on every transaction. That is part of our income.
every
do you guys-
transaction in the bank.
Every time if you're a member of a bank and you use their debit card,
debit cards.
there's a % of every transaction that we get
Yep.
income on, just like the vendor.
Just like
Yeah.
Visa would.
Correct. Just
Okay.
like yeah.
Gotcha.
Which is why back in the day, which I kind of still don't know why small businesses don't take advantage of this. Like when you used to pay for gas, it was like more expensive if you charge credit. That made sense because
Right.
it is more
Yeah.
expensive.
Yeah.
And now they're starting to do that now. Now they're starting. If you go in
And
and
they
use your
should.
credit card, now the
Yeah.
vendor is charging 2%.
I'm 100%. I support that for a small business.
So let's come back to what you're saying right now. Like as a bank, you're saying 1% of a transaction. MasterCard and Visa are charging 3%.
yeah, whatever. I
2
don't
to
know.
3%.
Yeah.
Right. So they've jumped in the middle. They've taken the spot of the bank and they've doubled the rates. Right. So really, Visa, MasterCard are not something we
Well, you gotta
really
understand that
want.
there's a method to
we
their
want to
madness.
have direct transaction.
Yeah, but what they've done, Discover started this. So what they've done is they raised their rate to the provider, which would be the retail store, wherever you're buying from, but they invented cash back to give back to the consumer.
Right.
So the consumer doesn't care that you're charging that Walmart's getting charged 3% for your purchase. They care that you're giving me 2% return on my money versus 1% from Discover versus 1.5 from Capital One. So it becomes a race to reward the consumer for consuming. And then they
And the
you know,
price goes up.
But
price goes up.
but
So they
now
charge
the vendors
vendor,
are
the vendor
now
raises their price.
yeah
That's
the
that.
vendors are now starting to charge additional like everywhere I'm going now, and I use my
Well,
credit
depends.
card.
What he was saying, I think,
They're
is
they're
small
telling me
businesses.
if you use your
Yeah.
credit card, we're charging you an additional
because
2
they
to
can't afford
3%.
to take that hit.
Yeah.
Like that's the
So
like,
so
big box stores can. They just eat
Right.
it, but small businesses
Well,
can't.
and the problem with that is they're desperately trying to move towards a cashless society. So
100% they are.
at a
Yes.
certain point,
Yep.
you're not going to have a choice. You're going to have
Yep.
to take that credit card or
Yep.
whatever it is, that USDT.
Yeah.
or the
whatever-
bank
whatever
debit
it is.
card, and at half the rate, right? What we need to do is kind of get rid of Visa and Mastercard.
I don't know.
People-
I got to be honest. I still like.
I
my
mean, the
2%.
thing is, Visa Mastercard is giving you a line of credit essentially, right?
Mm-hmm.
Right. So with a bank debit card, it's coming right out of your account.
Yep.
Like I noticed that would struggle to get a loan from my bank, but I could get $300,000 in credit cards. Why?
Oh, easy because
They're charging 20%.
yeah, they make massive money on people that don't.
Yeah,
pay
but
it
I
back.
pay it every month.
I know they don't make money on you,
Yeah, they hate
but that's
you.
not normal. That's not normal.
Yeah, we got to understand a lot of the conversations we're having, like you were talking about using your line of credit for investing. That's not how most people use it. Most people want something. They
For a
want
sofa.
a kitchen, or they want a
Correct.
sofa.
And then they sit on the sofa for a year at 15%.
Yes.
Yeah, and they probably don't even pay off their HELOC. They probably just pay the interest only
Hmm.
and sit on the principal and never actually get it paid down. They do that on their credit cards too. Like I bet this table, all 4 people here pay their credit cards down every single month and don't sit on any wants on their HELOC.
Correct.
And that's responsible finance. But what he's saying, I think, is that most people don't treat their finances responsibly. They treat it like the federal government does.
When I was in the branch, I mean, you'd be amazed at people, and they come in with $40,000. Sometimes one party in the marriage doesn't even know that the other did, and then they pay it off, and you think they're good, and you counsel them. Literally 2 years later, they're back in your office.
Wow.
I mean, that is more normal than the other side.
Wow.
That is more normal, especially in a rising, like what we've had with rising housing. You get all that equity.
Yeah.
Then people consolidate, and they're like, okay, now I'm good, and then they just do it again.
Look, I'm a big supporter of good debt. Big supporter of good. Our mortgage is good debt.
Yep.
It's good debt. It's going to
Absolutely.
theoretically appreciate over time. You're going to be paying down on it because principal's baked into your payment.
Yep.
It's all good debt. Car, bad debt.
Very bad debt.
Very bad debt. Buy cars responsibly. Don't overpay. Don't buy more than you need. Cars, bad debt. HELOCs are the ultimate wild card.
Yes.
Because depending on how you use them, you can create the worst financial disaster of your life or the best financial decision you'll ever make. And it's the same money.
Correct.
It's totally about your mentality and how you walk into it. But I have seen banks drop $200,000 in somebody's lap.
Yeah.
And they blow it all on crap.
Easy. Yeah, easy.
And next thing you know, they're sitting on this additional mortgage that they can't afford, and they're buried.
I mean, there were times when I don't think the banks do it anymore, but some banks were giving out a debit card on their HELOC.
Jeez, that's terrible. Wow.
And that was real. I mean, that really happened.
Didn't they used to? Wasn't there a time? I feel like maybe I invented this. I feel like there was a time you had to verify you were using your HELOC for legitimate HELOC purposes, because HELOCs weren't they originally supposed to be just for home improvement?
That's HMDA related, so that's a reg. That's different.
That's different.
Yeah,
Okay.
totally different. But that's HMDA regulations, like how we report to the government.
Oh, okay.
Yeah.
All right. So
But no, I mean, I've been doing it since 2000, and we didn't have that.
none of that.
Yep.
Fair enough.
Yep.
I hate touching my HELOC. It's,
Yeah.
I totally sit on my line of credit.
It's
for the
emergency
business.
funds.
It's emergency. It's if something goes horribly wrong, I've got a safety net. That's how I see it, and pay it off as soon as possible.
Yep. Yeah, because credit card debt's unsecured. So in a really bad scenario, you can walk, in theory.
Right.
If your home is the collateral, you can't walk. So people need to understand that. That's more of a commitment.
I remember I used to struggle with the idea that people don't put everything on their credit card, because the cashback
Yes.
is like a
Cashback's free money.
It's like a 2% free, like a bonus.
It's free money.
And then I realized how most people are spending, and I was like, oh my God, 90% of the population shouldn't be allowed to have a credit card. It should be banned from. They just have to take a test to get one. But I never realized that, because my dad, from the age of like 9, would drill it into us, and he got us credit cards when we were like 16, and he would make us use them. Make us pay
it
them
off every month.
He didn't pay it. We paid it. We had to pay it. We had to learn how to make the payments, cut a check, and all of that.
They don't teach that in school.
No, and I remember I went into college and I had this credit card with like a $400 limit. And my buddies found out I had a credit. They're like, "Oh, you got a credit card? Let's go to the beer store." I was like, "No, no." I was like, "My dad's been drilling me for the last 10 years. I don't use this thing unless I'm in Paraguay in a prison and I need to get out and get back to the States." And they didn't understand. They were completely like blown away.
They just thought it was like free money.
Yeah, they were completely blown away. I had this credit
Oh,
card.
credit card. Oh,
would
you
not
just got
use it.
money. Oh, you got all the money you need.
That's why they passed regulation that banks weren't allowed at college
Colleges.
campuses.
I think that was the greatest
It was
regulation
good.
ever passed.
It was a very good
Oh,
reg.
they were brutalizing. They'd give them like $2,000 credit
Hey,
cards.
I had one. I admit
Did
it.
you?
I had one. I was terrible with it.
My
We-
dad
we
told
used
me if
to-
I signed up for one of those, he would
Yes.
kick my ass.
There-
I got a T-shirt out of it. I was happy.
There was a dude. There was a time when you could bounce, like you could bump your credit card balance and transfer it to another credit card for 0% interest.
Oh yeah, I played that game for a little
100%.
while.
Yeah,
100%.
and for probably about 3-4 years. Like
Yeah.
anytime we just
move it.
bounced it, moved it.
When I was first trying to get my career started, that's
And then
I
they
literally
stopped that.
lived on bouncing
Yeah.
credit
You
cards.
can make that
Yeah.
work, for the record.
I
you
did.
can make it work.
And it works very
And
well.
even
for you, but you've
3%.
got to eventually pay it off.
You
You
do.
can't just
Yes.
move it around forever.
But you
like I
could-
was buying properties and trying to
Yep.
get started off. Like I
And
wasn't.
You could take $20,000, $25,000, $30,000 credit card as down payment on real estate, and then you can still transfer that. Boom, boom, boom. You can bump it 3%, right? 3% for a year.
Yeah,
So
yeah.
every year you just have to bounce that credit card, and now you got a 3%, $20,000, $30,000 loan, which is
Correct.
pretty good.
Yeah,
right?
absolutely. it
So
is.
if you can manage that and use it, strategically,
manage it as the keyword.
yeah,
Yep.
it's a great. It's
And then when you sell the property or whatever, you just pay it off and you
Yep.
do it again. Do it again.
So when I was like, if I had big jobs, I had big contracting jobs. One time, I had a gigantic spray foam job, and
Do you say spray foam?
spray foam.
He owned a roofing company.
Yeah,
and he would do
when
spray
I did
foam.
spray foam. So it was the Strasbourg Railroad Museum, and I got the job, and it was a $200,000 job. And then I went and I ordered the material, and the vendor capped me on what material they'd send me. I'm like, dude, I just sold a $200,000 job. What do you mean you won't give me the material? Like, I'm getting state phases of payment, and I got to get X amount done. So, like, I almost didn't get the job. I actually had to go to family members to borrow the money.
Oh, to get it.
And then, like, I borrowed $20,000 from 2 different family members, and I told them I'll pay you, I think it was 10% or 5%. I just need the money for a month. So you make 5% in a month. Borrowed the money, and then they floated me through, and then I paid them back and gave them 5% extra. But it was like crazy. I was like, I can't believe I'm going to lose this job. And it was a great job. I was making, what's the term?
Bank.
There's a term when you make a large profit margin. It just slipped my mind right now.
I don't know. I've never done that.
That's either.
I make little.
So
profit.
anyway,
I'm
but yeah,
salaried.
I was like, it was a very good job. It was a very good opportunity, and basically my vendors weren't gonna float me, and I needed more credit line, and so.
You know what?
But I worked it out. And
Fortune favors the bold, buddy. That's when you got to get creative.
Yeah.
I think every entrepreneur has
Yeah.
gone through that particular scenario.
He's the definition
And
of that.
yes,
Oh
and the
my
successful ones, they figure it the f out. They pull strings, they beg, they borrow, they steal. Like they figure out a way to do it, and then they pay back everybody that helped them richly. That's the trick.
Yeah,
you got to reward everybody that was in on the solution.
5% in a month.
5% in a
I thought
month.
it was pretty generous.
5% in a month.
Yeah.
That's a hashtag win.
Yeah, I thought it was
All right,
good.
we are out of time, Derek. Thank you so much.
thank you.
It was a great having you on. I really
you.
appreciate your insight. There's a lot of good info. Jimmy, you were definitely here.
Mr. Moll.
Thank you. Appreciate it. Thank you. Thank you.
Everybody, thank you for joining us. We'll see you in a week.
All righty.
Not on YouTube. We'll see you on Spotify.
Yes, they don't
Since
like
they
us.
blackballed us.
The Broken Agenda Podcast. Sponsored by Laughing Rock Technology.